Will your income tax return be scrutinized by the department? Are you on their radar for compulsory scrutiny? Income tax return scrutiny guidelines. Who will be called for IT return scrutiny? Compulsory scrutiny of income tax returns should not be treated as a routine notice. It involves detailed verification of income, deductions, exemptions, past assessment history, supporting documents, and explanations submitted during filing. Businesses, charitable institutions, and high-value taxpayers should maintain proper records, reconcile AIS and Form 26 AS data, keep appellate orders ready, and respond to notices within the prescribed time. A proactive compliance file can help reduce confusion when a case is selected for complete scrutiny under CBDT parameters. CBDT has officially released its fresh guidelines for the compulsory selection of income tax returns for complete scrutiny during the financial year 2026-27. These rules lay out exactly which tax returns filed during the previous cycle will face line-by-line rigorous administrative audits. The CBDT has explicitly clarified that routine data mismatches flagged by AIS, SFT, NMS, or CPC, TDS will no longer automatically trigger compulsory scrutiny unless backed by independent, concrete evidence of tax evasion. The 6 mandatory scrutiny parameters. The tax department has established 6 system scenario codes that bypass standard random algorithms and pull a return directly into complete scrutiny. CS01 survey cases. Any taxpayer whose business premises were subjected to an income tax survey under Section 108T on or after April 1st, 2024. Note: routine TDS verification surveys under Section 133A, 2A are explicitly excluded from this trigger. CS02 search and requisition cases. Cases where an aggressive search under Section 132 or an asset requisition under Section 132A was initiated on or after April 1st, 2020. For searches conducted on or after September 1st, 2024, the special block assessment provisions under Section 158 PA 6 apply. CS03 reassessment notices. Returns filed in response to active statutory notices under Section 148, where assessments are scheduled to be wrapped up on or before March 31st, 2027. CS04 deregistration of exempt entities. Charitable trusts, NGOs or institutions filing Form ITR 7 whose statutory tax-exempt registrations under Sections 12A, 12AB, 10 to 23C or 35 were denied, cancelled or withdrawn by a competent authority on or before March 31st, 2025. Yet they still went ahead and claimed tax exemptions in their return. CS05 recurring issues. Involving large additions. Any return where substantial additions to taxable income made in past years on an identical question of law or fact have achieved legal finality. CS06 specific tax. Evasion information. Returns flagged by specific, cross-verified and actionable intelligence pointing to tax evasion, shared directly by external enforcement agencies. Parameter CS05 acts as a programmatic tracking system designed to stop taxpayers from continuously repeating aggressive tax reduction positions or deduction claims that the department has already defeated in prior audit cycles. An ITR is pulled into compulsory scrutiny under this rule only if 3 very strict criteria are met simultaneously. Identical issue. The contested item in the current return must share an identical factual or legal foundation with an item disallowed in a prior audit cycle, such as disputed depreciation rates, contested business expense deductions, or characterization of capital gains. The high-value monetary thresholds. The addition made to the income in that previous year must meet or exceed greater than 50 lakh rupees across the 8 major metro charges: Ahmedabad, Bengaluru, Chennai, Delhi, Hyderabad, Kolkata, Mumbai, and Pune. Greater than 20 lakh rupees across all non-metro regional jurisdictions. Attained finality. The historical addition cannot be an active, ongoing allegation. It must have reached absolute finality under the law, like the ED, FIU, or state GST departments. To recap, CBDT has released fresh guidelines for compulsory ITR scrutiny for FY 2026-27, identifying 6 specific system scenario codes that will trigger mandatory complete scrutiny. These include survey cases under Section 133A, search and requisition cases, reassessment notices, deregistration of exempt entities, recurring issues with large additions, and specific tax evasion intelligence from enforcement agencies. Remember, routine data, mismatches will not automatically trigger scrutiny unless backed by concrete evidence, and high-value thresholds apply. Greater than 50 lakh rupees in metro cities and 20 lakh rupees in non-metro jurisdictions. Thank you for watching. Stay informed about tax compliance and make sure you're prepared for any scrutiny. Subscribe for more updates on income tax guidelines.